Most people who start investing think they're on the right track. But here's something almost no one talks about. Beginners lose money not because investing is hard, but because they make small, avoidable mistakes that quietly drain their account year after year. And what's even worse is that most beginners don't discover these mistakes until it's too late. They assume the market is the problem, or the economy, or bad luck. But in reality, just 7 common mistakes can decide whether someone becomes wealthy over time or stays financially stuck forever. Today, you're about to learn exactly what those mistakes are, why they're so dangerous, and how you can avoid all of them starting right now. If you want your money to grow the way it should, and you don't want to lose years of progress, then make sure you watch until the end, because one of these mistakes alone can cost you tens of thousands of dollars over your lifetime. Let's begin with the first mistake, one that almost every new investor makes without even realizing it: investing without a clear direction. You'd be surprised how many people start investing simply because they heard it's smart or everyone is doing it. But when you ask them what their goal is, how long they want to invest, or what level of risk they can handle, they don't have an answer. And that's a huge problem, because if you don't know where you're going, how can you possibly choose the right path? It's like throwing your money into random places and hoping it magically grows. Even a simple plan can make a massive difference. You don't need complicated spreadsheets or advanced formulas. All you need is clarity. Are you investing for retirement? For financial freedom? To build passive income? To buy a house? Your goal determines what you invest in, how much you invest, and how long you stay invested. Without a plan, you're not investing. You're guessing. And guessing is expensive. Let me ask you something that most people never ask themselves. What is your main reason for investing? Think about it for a moment. Is it long-term freedom, early retirement, stability, or maybe you want to stop worrying about money? Drop your answer in the comments. You might be surprised how powerful it feels to actually put it into words. Another mistake beginners constantly make is chasing quick profits. It's so easy to fall for the hype. You see someone online claiming they doubled their money in a week. A friend tells you about a stock that is about to explode. A new crypto coin starts trending, and everyone says it's the next big thing. And suddenly you feel like you must buy it before you miss out. But here's the painful truth. Hype almost always comes right before a drop. When beginners chase quick profits, they usually buy when prices are at their peak, right when excitement is the highest. And soon after, reality hits, the price falls, and the beginner panics and sells. This cycle is the fastest way to destroy your money. True investing is not gambling. It's not about chasing explosions. It's about steady, consistent growth. The wealthiest investors don't try to get rich overnight. They build slowly, quietly, and patiently. Ask yourself honestly, have you ever bought something just because everyone was talking about it? Don't be shy. Comment below. You'll see you're not alone. Another painfully common beginner mistake is investing in something they don't understand. I see this every day. People buy stocks because someone recommended them. They buy crypto with names they can't even pronounce. They buy ETFs without knowing what's inside them. But would you ever buy a car without knowing whether it even runs? Would you buy a house without checking the location? Probably not. Yet people throw money into investments they know nothing about. Understanding your investment doesn't mean you have to be an expert. It just means you should understand the basics. If it's a company, what does it do? Does it make profit? Does it have growth potential? If it's a fund, what types of companies are inside it? If it's crypto, what problem is it actually solving? One simple test can reveal everything. Explain your investment in one simple sentence. If you can't, you don't understand it well enough. Choose one investment you currently hold and comment the name. I'd love to see what everyone is researching. Let's move on to emotional investing, one of the biggest wealth killers out there. Humans are emotional creatures. When something rises, we get excited and want to buy more. When something falls, we get scared and want to sell. This natural human reaction is completely normal, but it's terrible for investing. Most people feel fear when prices drop, even though that's actually the best time to buy. And when prices rise quickly, beginners feel like they're missing out, so they rush in and buy near the top. This is the exact opposite of what successful investors do. Markets move in cycles. Prices rise and fall constantly. A dip doesn't mean disaster. A spike doesn't mean guaranteed growth. But your emotions can trick you into making the worst possible decisions. That's why having a plan matters so much. It keeps your emotions from taking control. Let me ask you a question. When your investments drop, do you panic or do you stay calm? Comment honestly below. Now, before we continue, if you're learning something valuable so far, go ahead and like this video, subscribe to the channel, and share this with someone who's trying to learn about investing. Which of these mistakes do you think you might be guilty of? Comment below. I read every reply. The next mistake is trying to time the market. Every beginner does this at some point. You wait for the perfect moment to buy. You wait for the perfect moment to sell. You look for signs, predictions, news, charts, hoping to perfectly guess the top or bottom. But here's the truth. Even professional investors with decades of experience can't do this consistently. And beginners have zero chance. Timing the market is like predicting the weather for every hour of the next year. Impossible. You don't need perfect timing to be successful. What works is staying invested over time, investing consistently, and letting compounding work its magic. Do you think you've ever tried timing the market without realizing it? Tell me in the comments. I guarantee most people have. Another dangerous mistake is putting all your money into one investment. Beginners fall in love with one stock, one crypto, or one idea. They go all in because they believe in it. But even great investments can drop unexpectedly. Companies can fail. Crypto projects can disappear. Industries can slow down. When you put all your money into one thing, you're taking a massive risk without realizing it. Diversification exists for a reason. It protects your future. Spreading out your investments across different industries, countries, and asset types keeps you safe. Think of it like building a table. A table with one leg falls instantly. A table with many legs stays strong, even if one leg breaks. How many different investments do you currently have? Drop the number in the comments. I'm really curious. Now let's talk about one of the silent killers of long-term wealth, high fees. Beginners often don't even notice them. But fees are everywhere. Brokerage fees, fund fees, advisor fees, transaction fees. Even a small fee can cost you huge amounts of money over the long run. For example, a 1% fee might not seem like much, but over 30 years it could cost you tens of thousands of dollars in lost growth. That money could have stayed in your pocket. Always check the fees before you invest. Look for low-cost index funds or ETFs. Be careful with frequent trading because transaction fees add up quickly. If you can reduce your fees, you increase your profits without doing any extra work. Now that we've covered all 7 mistakes, here's what you need to know. You don't need to be a genius or a financial expert to become a successful investor. You just need to avoid the major traps that cause beginners to lose money. A patient, consistent investor will almost always outperform someone who constantly chases excitement. Your wealth grows when you stay consistent, stay informed, stay calm, and stay invested. Anyone can do this. You just need the right habits. Before we finish, I want to ask you something important. Which of these 7 mistakes have you made in the past, and which one are you determined to fix starting today? Tell me in the comments. I really want to see your progress. And if you enjoyed this video and want more helpful content like this, make sure to like, subscribe, and share this with a friend who's just starting to invest. You might save them from years of mistakes and help them grow their wealth faster. Thanks for watching, and I'll see you in the next one.